Most traders don't fail because they chose the wrong strategy. They fail because they cannot sit still. They cannot accept loss. And they cannot control the voice in their head that says, just one more trade. The market doesn't destroy accounts. Human behavior does. Welcome to Mind Over Market. This channel is about the side of trading nobody wants to talk about, the mental side. Not indicators, not entries, not strategies. Because long before a trader loses money, they lose control of themselves. You see, there's a pattern that repeats itself across every market, every time frame, every country. Traders enter with hope and exit in despair. They blame the strategy. They blame the broker. They blame volatility. But the real culprit is staring back at them in the mirror. The uncomfortable truth? Trading exposes who you really are. It magnifies your weaknesses, your impatience, your need for validation, your inability to accept being wrong. And until you confront these parts of yourself, no strategy in the world will save you. The markets are a psychological battlefield, and most traders arrive unarmed. Most beginners believe one thing, that somewhere out there exists a perfect strategy, a magical combination of indicators that never fails, a secret formula whispered among the professionals. So they jump from system to system, from video to video, from moving averages to Fibonacci retracements, from hope to disappointment. They collect strategies like coins, but never commit to mastering one. But here's the uncomfortable truth that no one wants to hear. Most traders don't lose because their strategy is bad. They lose because they can't follow any strategy consistently. The problem isn't the plan. It's the person executing it. You could hand a profitable strategy to 10 traders, and 9 would still lose money. Why? Because when real money is on the line, when the pressure builds, when emotions flare, the strategy doesn't fail. The trader does. They take trades outside their rules. They move their stop loss. They double down on losers. They exit winners early out of fear. The strategy remains unchanged, but the execution crumbles under the weight of human emotion. Every trader eventually faces the same enemies: fear, greed, impatience, ego. These are the 4 horsemen of trader destruction, and they ride through your account without mercy. Fear makes you close winning trades too early. You see profit, and instead of letting it run according to your plan, panic whispers, "Take it now before it disappears." So you do, and you watch the trade continue without you, reaching your original target while you celebrate a fraction of what you deserved. Greed makes you hold losers too long. You're down, but you refuse to accept it. It will come back, you tell yourself. Just a little more time. Your stop loss becomes a suggestion. Your risk management becomes negotiable, and your small loss becomes catastrophic. Impatience makes you trade when you should wait. The markets are quiet. Your setup isn't there. But you can't stand doing nothing. You need action. You need to feel alive. So you force trades that don't exist, chasing ghosts on the chart. Ego makes you revenge trade after a loss. You're not just wrong. You feel humiliated. The market has disrespected you. So you jump back in, not with strategy, but with emotion. You're not trading to win. You're trading to feel right again. And the market rewards none of these behaviors. None. The chart doesn't care about your rent payment due next week. It doesn't care that you've been studying for 6 months. It doesn't care about your confidence after 3 winning trades in a row. It doesn't care how badly you need this trade to work. It doesn't care how much you've already lost today. The market only reacts to one thing: your decisions. And every decision you make is being recorded, not just in your trading journal, but in your neural pathways. You're programming yourself with every click. Take an impulsive trade. You've just strengthened the neural pathway for impulsivity. Exit early out of fear. You've reinforced the fear circuit. Revenge trade after a loss. You've deepened that groove in your brain. This is why trading is so dangerous for the undisciplined mind. You're not just risking money. You're building behavioral patterns that become harder to break with each repetition. The trader who takes 100 impulsive trades isn't just losing money. They're becoming an impulsive trader at a neurological level. The market is indifferent, but your brain is paying attention, and it's learning from everything you do. Here's why most traders stay stuck in the same loop year after year. They don't review their emotions. They review their results. They look at their trading history and ask, why did this trade lose? What was wrong with my entry? Should I have used a different indicator? But they never ask the more important question, what was I feeling when I took it? Because if you're honest, really honest, you'll realize that most of your losing trades had nothing to do with the market. The market was just being the market. The problem was you. You were bored. You were frustrated. You were trying to make back yesterday's loss. You were overconfident. You were desperate. Overtrading rarely comes from confidence. It comes from discomfort, from the inability to sit with uncertainty, from a need to do something, anything, to feel in control. Losses hurt, but what hurts more is the feeling of being wrong. So traders don't trade to make money. They trade to avoid feeling inadequate. They chase the feeling of being right. And slowly, trade by trade, their account bleeds. This is the cycle. Trade emotionally. Lose money. Feel worse. Trade to feel better. Lose more money. Feel even worse. The spiral continues until the account dies or the trader quits. Successful traders think differently. Fundamentally differently. They don't try to win every trade. They try to execute well. There's a massive difference. Winning is about outcomes. Execution is about process. Outcomes are unpredictable. Process is controllable. They don't see losses as failure. They see them as cost. Just as a retail store has overhead costs, traders have losses. It's the cost of being in business. The question isn't whether you'll have losses. The question is whether you'll manage them properly. And most importantly, they separate their identity from the outcome. This is the ultimate mindset shift. A losing trade does not mean you're a bad trader. Just like a winning trade does not make you a genius. You are not your last trade. You are not your last 10 trades. Professional traders understand something crucial. In the short term, anything can happen. Randomness plays a massive role. Good trades lose. Bad trades win. But over hundreds of trades, over thousands of decisions, the probabilities reveal themselves. Consistency is built in boredom, in patience, in discipline when nothing is happening. It's built in the ability to close your laptop when your setup isn't there. It's built in taking a loss quickly when you're wrong. It's built in the unglamorous hours of review, journaling, and self-reflection. Here's a simple mindset practice that separates amateurs from professionals. After every trade, win or lose, don't ask how much you made or lost. Don't immediately check your account balance. Don't celebrate or spiral into regret. Ask this instead. Did I follow my rules? Did I respect my risk management? Did I trade calmly? Or was I emotionally compromised? Was this trade part of my strategy? Or did I force it? If you followed your process, if you respected your risk, if you traded with discipline, the trade was a success, regardless of outcome. This is how you build the identity of a disciplined trader. Because here's what happens when you focus on outcomes. You reinforce randomness. You win a bad trade and think you're brilliant. You lose a good trade and think you're hopeless. Your confidence swings wildly based on results you can't control. But when you focus on process, you reinforce discipline. You build self-trust. You create evidence that you can control yourself under pressure. And over time, this self-trust becomes your greatest edge. This is how traders grow. Not loudly, not dramatically, quietly, slowly, mentally. One disciplined decision at a time, they build the psychological capital that allows them to survive and eventually thrive. Trading is not a battle against the market. It's a battle against yourself, against your need for instant gratification, against your fear of missing out, against your inability to accept uncertainty. The market will always be volatile. It will always be unpredictable. It will always challenge you. But the market hasn't changed in decades. The same patterns repeat. The same principles apply. What changes is the trader. Most traders spend years searching for the holy grail strategy when the real work is internal. They need better emotional regulation, not better indicators. They need self-awareness, not more screen time. They need to understand why they do what they do under pressure. Think about it. You can learn a profitable strategy in a week. You can understand risk management in a day. But learning to control your emotions, to sit with discomfort, to act against your impulses, that takes years. That's the real work of trading. And this is why trading has such a high failure rate. Not because it's intellectually complicated, but because it requires psychological mastery that most people never develop. It requires you to become someone different, someone more patient, more disciplined, more comfortable with uncertainty. The question isn't whether you have a good strategy. The question is, are you willing to do the internal work to become the kind of person who can execute it? If you want to master the mental side of trading, discipline, patience, emotional control, you're in the right place. Subscribe to Mind Over Market because this channel is dedicated to the 90% of trading that nobody talks about, the psychology. We don't promise get-rich-quick strategies. We don't sell you dreams. We talk about the uncomfortable truths that separate consistent traders from the masses who fail. We explore the mental game, the emotional patterns, the psychological traps. Because at the end of the day, your greatest edge in trading isn't a secret indicator. It's not insider information. It's not even a perfect strategy. Your greatest edge is a calm mind. A mind that can watch a trade go against it without panicking. A mind that can sit in cash when there's no setup. A mind that can take a loss and move on without revenge trading. A mind that separates its worth from its trading results. This channel is about mindset, not financial advice. We're here to help you build the psychological foundation that makes long-term success possible. Remember, the strongest traders aren't the ones with the most complex strategies. They're the ones with the most discipline, the most self-awareness, the most emotional control. The market will always be there. The question is, will you be ready when opportunity appears? Or will you still be fighting yourself? Welcome to Mind Over Market. Let's build that calm mind together.